Hi guys! A lot of information in the media doesn't show full spectrum what's happening in Seattle's real estate market right now, and I decided to record this episode to cover real estate industry and mortgage industry, and we'll show you guys what really is going on. My name is Oleg. I'm licensed broker with Redmond and Bellevue Commons. I'm 20 years in real estate industry. I'm a real estate investor and I'm a landlord. US has now over 22 million unemployed. We've been now decades of the job loss. And what that means is we lost more jobs for last 2 months than was created in last 10 years. Americans have trouble to pay for the rent, and 31% of the people cannot pay for the rent in April. And this is huge. Real unemployment rate passed 20% per the Future magazine, and CNBC shows it's over 23% right now. And Seattle Times post article on April 24 as Seattle we know before March it's gone forever. And before we start this episode, please click like button. It's gonna help other viewers like you to find this episode on YouTube. What is the 6 factors that drive real estate market? I'll put on the screen for you guys, and number 1 is supply and demand. Number 2 is demographics, age, race, income. Number 3 is interest rate. Number 4 is economy. 5 is government subsidies, and finally is location. And let's dive in together and we'll see what's really happening with Seattle real estate market right now. Number 1, supply and demand. We have low supply for spring of 2020, and due to the COVID-19, a lot of people are afraid to list properties because they're afraid to become sick after those people who enter their home and they put it in past listings right now. I'll put it on the screen for you guys some information about United States and Washington States. We are very fortunate. We have less than 30 days homes on the market. If homes on the market are like from 1 month to 2 months, it's a strong sellers market. From 2 months to 4 months, it's a balanced market. And if you have inventory more than 4 months, we have a buyer's market. Clearly, we're not in a buyer's market, not even in a balanced market right now. And here I'll show you guys a number of inventory in Seattle area and number of inventory in Eastside. You guys can see we have about 1 month of inventory in all those locations. And in conclusion, right now is a low supply and very high demand. But that's going to be changed very dramatically pretty soon. And I'll explain you why. For example, Chase Bank changed rules and regulations for loan mortgage industry, and what they did, they required to obtain loan, buyers must have 700 credit score and minimum 20% for down payment. And many banks and many mortgage companies following with strict rules to the buyers and makes more difficult to buy those properties. And confirmed limit in King County $741,750. That's a loan amount maximum allowed to the bank to loan to the people. And above that loan amount, if you have down payment, let's say 20%, so you probably will be okay to buy property up to $950,000. And this price range, it's very secure. But what's happened with a jumbo loan? What's happened with the loans above $750,000? Those loans, 90% is gone right now. And for example, Wells Fargo was the largest wholesaler for jumbo loan. They closed the program about a week ago as they continue to service those loans, but they're not offering those loans for wholesalers any longer. That's going to lead us to less buyers pool. If that's going to happen, prices going to be decreased. You guys remember back in 2008, 2009, when the sellers have to sell property and compete with another sellers, what they did, they listed property with 5% lower than anybody else was selling in order to sell those homes, create this negative spiral with prices going down. And number two is demographics. Demographics can reflect housing market, and I'll explain you why. Baby boomers used to move more often, and that doesn't move right now due to affordability. As you guys know, like average sale price for medium close price in Seattle right now is $790,000, and in Seattle's Eastside it's over $1 million. Simply not affordable any longer. And people used to move more often before, like from 4 to 6 years. Right now they're moving from 10 to 12 years, and that's going to be reflect the housing market as well, because people end up to be staying in a home longer. But 20% of unemployment, that can reflect real estate market a lot. And let's look together what industry reflected most with unemployment right now. I'll put on the screen for you guys, and you can see like almost 60% was reflected food services and drinking places. And beside them was reflected construction workers, healthcare offices, temporary help services, retail trade, and accommodation industry. And I'm seeing construction work is going to be rebound the fastest. Healthcare offices will be too, and childcare as well. But the temporary help services, retail trades, and accommodation industry probably will suffer the most. And all of those people who work in those industries reflect the most with unemployment. And factor number three to drive real estate market is interest rate. Interest rate is very important because when interest rate fail, it's decreased cost for mortgages and increased demand on real estate. And right now we have 3.25% interest rate for serious mortgages. And why is that? Because government buys mortgage-backed securities. And why is that? Because if they will not do that right now, we're gonna see 5.5 to 6% interest rate for serious mortgages, and that can ruin our economy for decades. Interesting and secretly, Federal Reserve Bank changed banking regulations to change reserve requirements to zero on March 15, effective March 26. You think if you put $50,000 in the bank right now, the money will be there? They are not. And banks allow you to loan 100% of your money, and that can lead us to future disaster in the banking industry, and banks may need bailout. And this low interest rate can be very high price for our future generations. Factor number four reflects real estate market is economy. And economy on a pause right now, same as real estate market on a pause right now as well. And very similar like we have in 9/11. So like nobody was buying and nobody was selling for 6 months. Our country is on a shutdown right now, so nobody goes to work. But I'm afraid people will be shocked when country will be reopened, because many employers not gonna get those employees back, and will still have high number on unemployment, and people will be staying on unemployment until those money is gone. And that can lead us to big financial disaster by end of 2020, maybe beginning 2021. Factor number five reflects real estate market is government subsidies, and those subsidies is very interesting. What's happening right now? The government announced program loan forbearance, and people who are unemployed don't have to pay for the mortgages for up to 3 months, possibly can be extended for another 6 months. But loan forbearance, it's not loan forgiveness, and most people not realize like after 6 months, for example, if you have a mortgage payment for $2,000 a month, you need to pay $14,000 for your mortgage. And what's happening is if you cannot pay after that, after month number 6, your options will be just go to loss mitigation department. Loss mitigation department can ask you, you must keep your payment for mortgage, and then we will review your hardship in your case. The same thing like happens in 2009, 2010. And with that is those people are gonna go to the loss mitigation department. First of all, they're gonna ruin the credit. The credit can drop up to 100 points. And secondly, those houses gonna go to foreclosure stage. And we're not gonna see probably any foreclosures this year, but we're gonna have a lot of people, a lot of trouble with mortgages in November and December, and maybe not, but maybe will be new wave of foreclosure starting in the spring of 2021. About 3 million people file for loan forbearance. That's not going to be end up very well. But government stepped in again with government subsidies. Fannie Mae and Freddie Mac offers now to buy loans in loan bailout programs. It's very generous of them, right? Question is, where's they going to get those money? Government doesn't have any money, and Feds can print money, and they can use our tax money, tax dollars. And what's gonna happen? More likely, the government gonna be bailed out with our tax money, banks again. And you ask me question, how that's going to reflect our housing market? If Fed's gonna print more money, they're gonna lead us to potential inflation, higher inflation in 2020, 2021. But artificially inflated home prices, you think gonna make homes value more? It's not necessary. We see a lot of different crazy programs right now, like this one, when they have proposal to for 12 months free rent and $2,000 a month subsidies to everyone in the United States. If that's gonna happen, that's gonna pull a lot of buyers from buying homes, and prices can be reflected with those programs as well. Lastly, the biggest factor reflect real estate market is location. And I think it's the biggest factor from all. We combine all together what we talked before, government subsidies, loan forbearance program, household income for the people. Location will be key from all of this, because in locations where the people are most protected, we're talking about Seattle, good parts of Seattle, South Lake Union, North Seattle, Green Lake, Fremont, Queen Anne, all Bellevue, pretty much all Kirkland and some parts of the Redmond. Those people are protected with a highly paid job and average household income over $170,000 a year for those people. And those people did not file for loan forbearance programs. They have good income. Nothing's really changed with the income for those people, and those people doesn't fit those category, those 60% for file for unemployment. And areas where the household income for the families is below $50,000 going to be reflected the most. And we will see what's going to happen in November and December, maybe like spring of 2021. But please put your comments below, guys, what you think about it. We're probably going to see a wave of foreclosures and like more homes on the market, and probably prices going to be dropped about 10%. Also, I want to tell you guys, the unemployment doesn't reflect directly the home prices. And as you see guys on the screen right now, unemployment rate and home sales do not have direct relationship. Another important thing is like to remember the Americans, about 53% of Americans have equity over 50% in their homes. This is a very important number. In Washington State, we have even higher number. And how many people have less than 10% equity in their properties? And those people probably will be more reflected to sell those properties if worse gets to worse. You see on the screen right now, it's about 6%. And comparable to 2007, before Great Recession, it was about 14%. So we have twice lower number of people who have less than 10% equity in the property. And with that, I'm saying, if we can see price decrease in the rural areas, we're not going to see decrease more than 10% in 2021. And if you ask me, should I buy a house right now? It's going to be a very good question. Because like if you're buying property in far rural areas, if your income like lower, like less than $100,000 a year, you doesn't know like if you're going to work next year or not, my advice to buy property as soon as possible, because you still have a job. We have very low interest rate mortgages, and you will be secure your family with a roof under your head, and this is very important. You remember, guys, in 2008, 2009, when we have a great recession and people wasn't able to pay for their mortgages. People who have houses, they stay in the housing for years without paying, and they was able to work with the banks, different programs, loan modifications. They did a lot of things to make sure they not lose that roof and those families survive. But who struggles the most? People who was in the rental properties. If you're a buyer looking for a buyer in good locations, expensive locations, you're going to be still have competition with other buyers, and you're going to need a good agents to buy those property like myself. So reach out to me. You see my number on the screen. I can help you to do that as well. And if you're a seller, and my advice for the sellers will be like, if you're selling property in South King County, Pierce County, or Snohomish County, sell as fast as you can. Don't wait for another year, because another year you're going to lose a lot of money. And I think probably price is going to go down in 2021 for about 10%. But if you're selling property in good locations, if you're selling property up to $1 million, you pretty much have no worry about it. And with confirming loan in King County, 741, and people have 20% for down payment, you pretty much secure. Banks will give loan for those people, and those property will be financeable. But homes above $1 million going to be hit, and prices going to be adjusted a little bit. We'll see what's going to happen in the future. But please put your comments below. I'd like to know what you guys think about that. And please smash the like button again if you've not done that yet, and subscribe for future episodes. As you see, a lot of information for you guys, and I hope this will be very helpful. Welcome to share this episode with anybody you know, like your friends and family. Until next time, make a fantastic day, guys.